Avani Bhatt, Senior Vice President at GM Financial. Now, Avni, overall the week that went by was a positive one. We snapped the 2-week losing streak on Nifty, but I think technical analysts would appreciate the formation of a shooting star pattern and a double top pattern on the daily price charts of Nifty. Both are bearish signals, and we are seeing a little bit of a dip this morning as well. What's your overall assessment of the market? Can we reclaim 22,000 in the coming sessions, or some bit of a consolidation is going to take place this week?
Good morning, Suyash, and a very good morning to all the viewers as well. So yes, the kind of move that we have seen on Friday, especially in Bank Nifty, is unprecedented. The kind of pace with which the moves have been happening. So first, I'll talk about Bank Nifty here. What happened is there was a resistance of 46,200 level, which was, Bank Nifty opened above that, and immediately 46,600, which is the crucial resistance for the month, that was also surpassed. It went up to the resistance level of almost close to 46,900. And immediately we saw the selling pressure also coming in on the same day, and the close was on the negative note. So it's a very, very negative sign as far as the daily trading pattern is concerned. So Bank Nifty, now the crucial support remains to be at 45,700. In case if it breaches 45,700, then we are looking at an intermediate support of 45,400 on the downside. But eventually the very, very important support level that Bank Nifty has to hold is around 45,000. On the upside, only above a decisive close above 46,600 will we see Bank Nifty coming out of the woods and moving up to around 47 to 4 and above that also. So 46,600, very crucial level. Bank Nifty has to close above that. Until then, we'll see this kind of volatile movement and Bank Nifty wandering around directionlessly in this range of 45,500 to, on the upside, 46,600. Now, Nifty comparatively, week on week basis, we have seen a good long built up, not just short covering. So Nifty is in a better shape as far as the trading view is concerned. And but again, it has come back to its original band of 22,000 on the upside, and on the downside, the support has come up to 21,700. So in case if 21,700 is breached, it may go down further to 21,500, which is a very good support base that has been formed around those levels. So Nifty, I would suggest that we can buy on dips in case if this current volatility takes Bank Nifty down to around 21,500. That will be a good buying opportunity. Sooner or later, we should be seeing the 22,000 mark being crossed, and on the upside, 22,200 level should be tested. So currently, this is the range. On the downside, 21,500. First support is at 21,700. And on the upside, it is 22,050 and 22,200.
All right, and one of the stocks that had been pushing market higher last week was Reliance Industries. RAL was up almost 8%, had registered one of its best week in 2 years, driving the market higher. In fact, it also scaled all-time high levels. What's your assessment of Reliance stock? More upside in the offing? Can we reclaim that 3,000 mark? In fact, it has not touched 3,000 levels ever. So is that a price target for the short term?
Definitely 3,000 is the psychological as well as the resistance that has been set by the option writers, the call writers. The good part is that Reliance has formed a very good base around 2,800 level. It had given a breakout about 2,800, and we saw a stupendous move up to around 2,940 on the upside last week. So the base is formed, probably in some more consolidation around the 2,860 to 2,940. And then we should be heading towards 3,000 and probably 3,000 and above levels also. That could take some time, about a month's time. February series, 3,000 is the resistance. So view is definitely positive. After a huge consolidation, it has moved above this resistance zone of 2,800. So now that becomes the base. You should be looking at buying opportunities in this in case if there is any dip.
Good morning, Avni. I'll State Bank of India announced their Q3 results on Saturday, and their net profits fell by as much as 35% to 9,163, though their total interest incomes jumped 22%. Their net interest margins reduced by 1 basis point, standing at 3.28%. When I look at the stock, it is at around 650 this morning, not very far from its 52-week high of 660. What do you make of this stock? Even in the last 1 year, it has given about 19% or so returns, going up and down. Slightly, pretty choppy. How does one approach State Bank of India?
Good morning, Amit. So SBI also has formed a base. So all these stocks, I think the base has been formed for SBI. It is around 630 level after a huge consolidation, after a very good consolidation. It saw a dip also below that, and then it recovered, and now it's consolidating. Results have not been as per the expectations of the traders. So we are not seeing any big up move here. 660 remains to be a crucial resistance, which is the 52-week high also. So the stock will gain momentum only if it closes above 660. Otherwise, currently, I feel for the February series, it should consolidate in the range of 630 to 660.
Okay, and what are your suggestions for our investors today? Your picks.
Yeah, so I'll like to go for updating the picks that we had given since last 2 weeks. The first stock is NTPC. Now in NTPC, we've been giving a buy call right from almost 305, 306 levels. And in last both the weeks, it was a buy trade. Now it has moved up to 230, 234 levels and above that. So again, it still remains to be a buy. The earlier target now becomes the support base. So stop loss, you can keep it at around 226, and we are looking at around 260 levels in a very short time. So now this time the bets are a little concentrated. Two stocks are from the PSE sector. First is NTPC, as I mentioned. The second one is Coal India. Now, Coal India also, I think most of these stocks have opened with a gap up, but we can look to buy on dips. So, Coal India would be my second pick. Around 414 to 415 is a good level to enter into the stock. On the upside, 445 and 460 will be the two targets, and 405 can be kept as a stop loss. The other two picks are from the metal sector. One is NMDC. It has seen a multi-year breakout, and after a consolidation of nearly 6 to 7 years. So this stock remains to be a buy for a huge target of around 260. And on the downside, stop loss can be maintained at 226. And lastly, is the sale. Sale, again, a very big consolidation on the verge of a multi-year breakout. So 125, 128 is a good range to enter into the stock for a target of 145 to 150 and a stop loss of 119. And lastly, on one stock from the auto sector, which has been quite ignored in past few sessions, which is TVS Motor. So TVS Motor also, the buying target would be somewhere around 2100 to 2110, the lifetime highs that it had tested a few weeks back. And a stop loss can be maintained at 1978. So these are the 5 picks for this week.
All right, that's the view coming in from Avani Bhatt. Ma'am, always a pleasure speaking to you. Thank you for joining us here on News 9.
Thank you.